my name is Nina Dunn and I'm a Director of the Alternative Future Foundation. As part of Sydney Alternatives Investment Week, I'm joined today by Jonathon Pullin to discuss the Barwon First Mortgage Fund. Jono, thanks for joining us.
Hi Nina, good to be here.
Great. So I'm going to ask you a series of quick questions so investors can get to know you and your strategy a little bit better. So let's get into it. Okay, so in a sentence or two, how would you describe the Barwon First Mortgage Fund?
The Barwon First Mortgage Fund is an open-ended, senior secured real estate debt fund, providing strong risk-adjusted returns to investors, currently around 8% per annum, regular distributions and good downside protection.
Okay, so the fund targets wholesale investors with returns from first-ranking mortgage security. What makes your strategy attractive in today's environment?
Well, the strategy really capitalises on a reduction in participation from major bank lenders in the market, gives rise to an opportunity for non-bank lenders such as ourselves to capitalise on that opportunity. Secondly, we find investors are attracted to real estate credit because our underlying investment is secured by Australian real estate, and many investors know that sector well.
Yep. Okay, so what's your highest conviction theme within real estate-backed private credit? Is it hotels or any other sector that you're excited about?
There'd be two areas for us to which we have high conviction. First would be residual stock loans. So residual stock loans are when the development is completed. It might be apartments, it might be townhouses, it might be residential land lots. They're completed construction. We go in and get a new valuation. We provide a loan against that valuation, typically around a 60 to 65% loan to value ratio, and the developer then sells down that completed stock over time. We believe they provide very good returns for the underlying lower level of risk compared to, say, a construction loan. Secondly, an area in the market to which we really like at the moment is lending to existing real estate. So typically that's a commercial property. It might be a newly built hotel. It might be an office building that has some vacancy. And we go through a period whilst that property itself is trading up to stabilisation. At that point, then the bank can come in and refinance our loan with 5-year term debt. Those opportunities we find very compelling because very few non-bank lenders in the Australian market target that particular opportunity. So we're able to generate good returns for our investors.
Okay, great. And how do you originate these deals? Where are you typically looking?
Well, our origination function in our business is extremely important. What we are trying to do is target the lower risk end spectrum of non-bank opportunities. So with that, we find that our borrowers, be it either property developers or owners, tend to be reasonably sophisticated and experienced. And with that, they place a lot of importance on their lending partners. So we apply a very traditional, genuine kind of relationship building origination strategy. A lot of it is done directly between us and the borrower directly without a third party in between.
Okay, so defaults are always a consideration in credit. How do you approach this and how do you manage them when they do occur?
Yes, so if I look at our experience over now what is hundreds of facilities that we've provided over many, many years, and if I was to boil all that down, in my experience, the best way to deal with defaults or potential issues with loans is very much a hands-on approach. So we go into a mode of a very high frequency of interactions with borrowers. We're workshopping alternate solutions for them. But the one piece that we're making sure we capture through that whole journey with our borrowers is a very pragmatic approach to getting a good, solid outcome for our investors. Okay,
great. So let's finish on something fun. If your lending style was a cocktail, what would it be and why?
Good question. Maybe a Negroni, bit of a classic. Got to get the balance right.
Yep.
Strong flavours.
Yes.
But an acquired taste.
Well, Jono, thank you so much for joining me today. If you would like to find out more about Sydney Alternatives Investment Week, please visit sidalts.com.au.